You know how we're always trying to get to the heart of things to really understand the fundamental shifts happening around us?
Yeah, definitely.
Well, today we're doing exactly that, taking a deep dive into something that feels like, well, a pretty major development in how finance and sustainability are starting to connect.
That's right. We're going to explore the launch of the Green Impact Exchange, or GIX. Think of it as the first stock exchange in the United States specifically, designed with sustainability right at its core.
Okay, a sustainability-focused stock exchange. Let's
Yeah.
unpack this a bit. It's more than just like a list of companies that happen to be green, isn't it?
Oh, much more.
We're talking about something more fundamental here.
Precisely. The central idea of GIX is to truly bridge that gap we always hear about, between companies making environmental commitments and the market actually holding them accountable.
Right.
It's about directly linking capital markets with genuine environmental responsibility.
So for this deep dive, we've gathered information detailing the exchange itself, its structure, its goals. Our mission today is to really understand what the GIX is all about, how it plans to operate, and ultimately why this should matter. Whether you're an investor, work for a company, or are just trying to track where sustainable business is headed.
And there's this interesting return to green program, too.
Yeah, that caught my eye. It sounds surprisingly proactive.
It is. What's fascinating when we really dig into the why behind the GIX is that it didn't just materialize out of thin air.
Right.
There's a significant driving force, and a key element is definitely the increasing demand from investors for genuine transparency. They want to know where their money is going.
And they want their capital to support truly green initiatives, not just claims.
Exactly.
And who are the people who actually, put this together? It sounds like it's coming from individuals with a real feel for the markets.
Absolutely. The GIX was founded back in 2022 by Daniel Leibovitz and Charles Dolan, both of whom are veterans of the financial markets. They have experience at the New York Stock Exchange. So, yeah, they definitely have a deep understanding of how exchanges actually function.
That adds a layer of credibility, doesn't it?
It certainly does.
So, their core mission, as we delve deeper here, is really to cut through all the noise, the confusing green claims, and really reduce greenwashing by making sure sustainability commitments are actually enforceable through the market itself.
Exactly. They aim to foster genuine accountability in ESG practices. And, the timeline for this has been quite rapid, actually.
Yeah, notice that.
They submitted their SEC application back in May 2023, made the public announcement in July 24,
Right.
received SEC approval just this April 2025, and they're planning to kick off trading in early 2026.
Wow. That's a pretty swift journey in the regulatory world.
Oh,
Okay, so the GIX is becoming a reality. Now, what truly differentiates it when we do this deep dive, compared to, say, a sustainability index or just a regular exchange that happens to list some ESG-focused companies?
Yeah, that's a crucial point for our deep dive. The GIX is setting a significantly higher bar with what they call their green governance standards. Okay. These aren't just about, ticking some ESG boxes superficially. They are designed to integrate sustainability deep into the fundamental operations of a company.
Okay, let's really drill down on that.
Yeah.
What are these specific standards that set it apart? What do companies actually have to do?
Well, there are several key listing criteria. First, there needs to be board-level commitment. And this isn't just a statement, right?
Right.
Companies have to demonstrate a formal sustainability strategy that's been approved at the board level, and it needs clear targets, short, medium, and long term.
So it's not just some report buried somewhere. The CEO, the board, they're actively involved setting goals.
That's the idea. It has to be a strategic imperative coming right from the top.
Okay, so digging deeper, it's clear it's not enough to just claim you're green.
Yeah.
It has to be embedded in the strategy.
Precisely. Second is transparent reporting.
Ah,
The GIX mandates using recognized global standards like SEC and TCFD for disclosing environmental impact metrics.
SCB and TCFD, just quickly, those are like agreed upon ways for companies to measure and report environmental stuff consistently.
Exactly. They provide frameworks so investors can actually compare companies apples to apples when they do their own deep dives. It brings much needed standardization.
That makes perfect sense. You can't really compare effectively if everyone's using different yardsticks.
Yeah.
What else is on this list of elevated standards?
Third is stakeholder engagement.
Okay.
Companies listed on GIX will need to show they're having regular dialogue with a broad range of stakeholders, investors, employees, the communities where they operate.
So not just shareholders.
Right. It's about ensuring their business practices align with their stated sustainability goals based on feedback. It's meant to be a continuous loop.
So this deep dive reveals it's a much broader perspective than just internal company stuff. It includes the community, employees.
Absolutely. And the final core criterion is operational integration. Companies need to show clear evidence that their sustainability commitments are actively influencing key areas like supply chain management, product development, how they handle risk.
It has to be woven into the fabric of the business, basically.
That's the goal. It has to fundamentally shape how they operate day to day.
That sounds significantly more comprehensive than just, putting out an annual sustainability report.
It's meant to be.
Now, I noticed something in our sources about a dual listing model.
Yeah.
Can you delve deeper into how that's actually going to function?
Yes, that's interesting. Initially, the GIX will allow companies to also be listed on established exchanges like the NYSE or NASDAQ.
Okay, why do that?
Well, it's pretty strategic. It lets companies tap into the existing market presence and, importantly, the liquidity of those major exchanges, while also signaling their strong sustainability commitment and credibility by being on the GIX list, too.
So it's like getting the best of both worlds initially?
Yeah.
The broad reach of the big exchanges plus the green stamp of approval from GIX.
Kind of, yeah.
But the information we have suggests that's not the end game. They're looking towards primary listings eventually.
That seems to be the long-term vision, based on our deep dive into their plans. As the GIX ecosystem hopefully matures and gains wider adoption,
Right.
the plan is to eventually transition towards having companies primarily listed just on this sustainability-focused exchange. That would really solidify its position.
As a central marketplace for green equities.
Exactly.
Okay, so we've explored the why and the what in terms of the standards. Now, let's really get into the mechanics. How does this whole thing actually work on a day-to-day basis? What's the operational structure?
Operationally, the GIX is leveraging technology from MEMX's electronic trading platform.
Mechanics.
Yeah, think of it as providing a sort of well-established, efficient plumbing system for trades.
Okay.
This means GIX integrates with the existing infrastructure of the U.S. stock market, the national market system, the NMS.
Ah, okay, so it
So-
fits in.
Right. That ensures trades can happen quickly and efficiently. It allows for liquidity, efficient price discovery. It's built on a familiar foundation.
So the actual buying and selling of shares, that part will feel pretty similar to other exchanges we know.
Largely, yes.
But what about making sure companies are actually sticking to those tough sustainability standards? That's where the real accountability comes in, right? That's key to this deep dive.
Absolutely critical. And there are several key accountability mechanisms built right into the GIX framework. First up, independent audits.
Okay, audit.
Third-party auditors, independent ones, will be responsible for validating the sustainability metrics reported by the companies, making sure they actually align with their public targets.
So external verification,
Yeah,
not just taking the company's word for it.
precisely. Adds a crucial layer of trust.
That's a big step towards preventing, vague green claims. What other measures are in place?
There's also going to be a public compliance dashboard.
A dashboard.
Yeah, think of it as a real-time tracking system. It'll monitor reporting deadlines, the findings from those independent audits, the status of any remediation efforts if needed.
So anyone can look it up.
That's the idea. A transparent, publicly accessible view of how a company is doing on compliance.
So continuous monitoring, not just a one-off check. And what happens if a company, upon closer look in these audits, doesn't meet the grade?
That's where the delisting protocols come into play.
Delisting, but
Companies that fail to meet the GIX standards face first a public designation and then, critically, potential removal from the exchange. But there's a process.
and that process involves the Return to Green program we mentioned earlier.
Exactly. That's the key mechanism here. It sounds like their flagship enforcement tool, really.
Okay, so how does Return to Green actually work? What triggers it?
It gets triggered if a company falls short. Maybe they miss their stated sustainability targets. Maybe they're reporting failures or governance issues flagged in the audits. If that happens, they get this public Return to Green designation. That immediately signals to the market, hey, there's an issue here that needs fixing.
And what happens during that period? There's a time frame, right? 180 days.
Yes, a 180-day window. During that time, the company has to submit a detailed plan to fix the non-compliance, and then they have to actually execute it.
And someone's watching them.
Oh, yeah.
Yeah.
Their progress is monitored, likely through regular, maybe quarterly updates. The whole point is to give companies a structured way to correct course and get back into compliance.
So it's not an instant boot. There's a chance to fix things.
Right. It's remediation focused initially.
But what's the final outcome if they can't fix it within those 180 days?
What if they successfully implement the plan, their full listing status on GIX gets restored, happy ending.
Okay.
But if they fail to do so within that time frame, they face delisting from the exchange. Full stop. So this program is really meant to actively fight greenwashing by enforcing accountability, but it does offer that chance to get back on track. It aims to uphold the integrity of the exchange.
That seems like a pretty powerful incentive for companies to stay compliant and, frankly, take their sustainability promises seriously.
You'd think so.
Now, let's flip this around. From the company's perspective, what's the actual appeal? Why go through this rigorous process, potentially dual list? What are the concrete strategic benefits for them?
Well, there are several quite compelling financial incentives, actually. First, direct access to ESG capital.
Right, the money.
The GIX connects listed companies directly with institutional investors who are specifically looking to put capital into environmentally and socially responsible ventures.
And we're talking big money here.
Huge. The figure mentioned is over $50 trillion managed in ESG-focused assets by investors connected to this initiative.
50 trillion. Wow. Okay.
That's a massive pool of potential funding that theoretically becomes more accessible if you're GIX listed.
So listing on GIX could genuinely unlock significant investment. What other financial upsides are there?
Secondly, there's the potential for valuation premiums.
Meaning their stock price could be higher.
Potentially, yes. Historically, companies that show strong sustainability governance have often traded at higher price-to-earnings ratios, sometimes significantly higher, maybe in the range of 12 to 18% higher, according to some analyses.
That's substantial.
It really is. So, if you're tracking companies, a GIX listing could signal that the market sees more long-term value there. It acts as a strong signal of robust governance.
Okay, so access to capital, potentially higher valuation. Anything else on the financial side?
Yes. Thirdly, potentially enhanced access to green financing.
Like green bonds.
Exactly. Being a GIX-listed company could make them more eligible for things like sustainability-linked bonds, maybe various tax incentives aimed at green projects. This could ultimately lower their cost of capital.
Okay, those are some clear financial carrots.
Mm-hmm.
But are there other advantages, maybe less tangible but still important?
Definitely. There are significant reputational and operational advantages. Think about it. The third-party validation you get from a GIX listing that enhances brand trust.
With customers, investors, employees?
All of them. It's a credible signal that says, we're serious about this, we're being checked. It's not just talk.
A clear way to show authenticity in a space where that's often questioned.
Precisely. It also fosters stronger stakeholder alignment. Showing deep commitment resonates well with investors, employees, regulators. It can improve those crucial relationships.
Makes sense.
And it might even spark innovation partnerships. GIX apparently aims to help facilitate collaborations with climate tech incubators.
Oh, interesting.
So listed companies might get an edge in adopting cutting-edge renewable energy or circular economy solutions.
So it could actually drive innovation within these companies too.
Yeah.
And finally, our sources mentioned something about regulatory foresight. What's that about?
Yeah, basically, by proactively aligning with GIX's tough standards now, companies can potentially get ahead of the curve. They might be better prepared for and maybe mitigate the costs of emerging regulations like the SEC's climate disclosure rules or the EU's directives.
Sort of future-proofing themselves?
Kind of, yeah, demonstrating a proactive approach.
Okay, it sounds like there are compelling strategic reasons for companies that are genuinely committed to sustainability to want to be part of this. Now, let's zoom out a bit. Take a step back and look at the bigger picture.
Okay.
What kind of impact could the GIX realistically have on the broader financial market?
Yeah.
And, the whole push towards sustainability?
Well, one of the most significant potential impacts as we delve deeper into its implications is really in addressing greenwashing.
Tackling that head on.
Right. By mandating these independently audited reports and having clear, enforceable consequences that return to green program GIX genuinely raises the bar. It shifts ESG accountability from often just voluntary pledges to something much more integrated into actual market mechanics.
That could be a real game changer for investor confidence in sustainable investing. What about the market demand itself? Is it strong enough to support a whole new exchange like this?
Well, the competitive landscape definitely shows a growing, persistent demand for sustainable investments. Yes, there's been some recent volatility in ESG fund flows, but
But the underlying trend.
the underlying trend, especially in private capital flowing into climate tech, seems strong. In the U.S. alone, Q1 2025 saw $5 billion invested in climate tech startups.
$5 billion in one quarter.
Yeah, that's a 65% jump year over year. So it really underscores this fundamental growing interest in the sector. The appetite seems to be there.
Okay, so the demand side looks promising. But what are the big hurdles? What challenges ahead does GIX itself need to overcome to actually succeed?
Yeah, there are definitely a few critical ones. One is liquidity concerns.
Getting enough trading activity.
Exactly. As a new and maybe initially niche exchange, it needs to attract sufficient trading volume to be competitive and truly effective. That's always a challenge for new exchanges.
Sure.
Another is scalability. They need to find that sweet spot, right? Balancing those really rigorous standards, which are their key selling point, with making the exchange accessible enough for a wider range of companies, maybe smaller firms down the line. That's crucial for long-term success.
Maintaining quality, but also achieving scale. Tricky.
Very tricky. And finally, there's global harmonization, or the lack thereof.
Meaning all the different ESG rules around the world.
Right. The fact that different countries and regions have varying ESG frameworks that could create complexities for companies thinking about listing internationally, or for investors trying to compare globally.
Those are definitely significant challenges. They'll need careful navigation.
No doubt, strategic solutions will be key.
But if they can successfully navigate these,
Then yeah, the Green Impact Exchange really does have the potential to be a genuinely transformative force in finance, fundamentally merging market infrastructure with real climate accountability.
it could really redefine how we think about corporate value, couldn't it?
It certainly could in the 21st century, absolutely.
So, to kind of wrap it all up after this deep dive,
Mhm.
the GIX isn't just another stock exchange popping up. It represents a significant statement, doesn't it?
I think so.
It's a dedicated marketplace built on this core idea that sustainability isn't just some side issue. It's a fundamental business imperative that needs market-level accountability, needs transparency.
Exactly.
And understanding its structure, how it works,
hmm
that gives you, the listener, a really valuable shortcut to being well-informed about where sustainable finance is likely heading.
It really moves beyond some of the, let's be honest, sometimes superficial ESG ratings we see.
Yeah.
It actively integrates environmental responsibility into the core operations, backed up by independent oversight and real consequences if companies don't deliver.
So maybe a final thought to leave with everyone. As you now consider the companies you choose to support, maybe invest in, how might the rigorous standards of an exchange like GIX fundamentally change your perspective on what truly constitutes enduring value? And, long-term success in this rapidly changing world.
It's a critical question to ponder for sure.